What I'm about to tell you could be the difference between building real wealth and watching your hard-earned money disappear into the digital void. Everyone is talking about cryptocurrency. Everyone thinks they're going to be the next Bitcoin millionaire. And almost everyone is making the same catastrophic mistake that's going to cost them everything. I don't care if you made money on Dogecoin last year. I don't care if your neighbor bought Ethereum and bragged about it at dinner parties. What I care about is the cold, hard reality that 95% of people jumping into cryptocurrency are not investors. They're gamblers, and gamblers always lose in the end. Before I destroy every assumption you have about crypto investing, you need to understand something about me. I've been analyzing markets and building wealth for decades. I've seen every bubble, every craze, every get-rich-quick scheme that's promised to change everything. The dot-com bubble, the real estate bubble, the gold rush mentality that comes and goes like clockwork. And what I've learned is this: the fundamentals of wealth building never change, ever. Assets that generate cash flow, businesses that create real value, investments that can be analyzed with actual numbers. These principles have worked for centuries, and they'll work for centuries more. Everything else is just noise, expensive, dangerous noise. Now I know what you're thinking. You're thinking this is just another old-school finance guy who doesn't understand technology, who's afraid of change, who's stuck in the past. Wrong. I understand technology perfectly. What I also understand is the difference between revolutionary technology and speculative mania. And right now, the cryptocurrency space is dominated by speculation, not investment. When your barista is giving you tips on which altcoin to buy, when your Uber driver is talking about NFTs, when people are taking out second mortgages to buy digital tokens they don't understand, that's not adoption. That's a bubble. And bubbles always pop. Let me ask you a simple question. When you buy a stock, what are you buying? You're buying a piece of a real business, a business that makes products, provides services, generates revenue, employs people, owns assets. You can look at the balance sheet, you can analyze the cash flow, you can understand what drives the business model. You can make an informed decision based on actual data. When you buy cryptocurrency, what exactly are you buying? In most cases, you're buying a digital token that represents absolutely nothing. No underlying business, no cash flow, no assets, no revenue, just the hope that someone else will pay more for it tomorrow than you paid today. That's not investing. That's speculation. And speculation is another word for gambling. Here's what kills me about the crypto craze. People are putting money they can't afford to lose into assets they don't understand, based on advice from people who know even less than they do. They're watching YouTube videos from 20-year-olds living in their parents' basement who claim to have unlocked the secret to infinite wealth. They're following Twitter accounts that promise 10,000% returns. They're joining Discord groups where everyone is screaming about going to the moon. This is not how wealth is built. This is how wealth is destroyed. The psychology of cryptocurrency investing is absolutely fascinating and absolutely terrifying. It preys on every cognitive bias that causes people to make terrible financial decisions. Fear of missing out drives people to buy at the top. Confirmation bias makes them ignore warning signs. Social proof convinces them that if everyone else is doing it, it must be smart. And the promise of easy money makes them throw away everything they know about risk management and diversification. I've watched intelligent, successful people completely lose their minds when it comes to crypto. Doctors, lawyers, engineers, people who are methodical and analytical in their professional lives suddenly start making investment decisions based on memes and social media posts. Let me tell you what happens to most crypto investors. They start small, maybe putting in a few hundred or a few $1,000s. They pick a coin that's been going up because that's what humans do. We chase performance. The coin keeps going up for a while and they feel like geniuses, so they put in more money. Maybe they take profits from their stock portfolio, or they use money that was supposed to go into their emergency fund, or they even borrow money to increase their position. The coin keeps going up, and now they're convinced they've found the secret to wealth. They start calculating how rich they'll be if this continues. They start making plans based on unrealized gains. They tell their friends and family about their success. Then reality hits. The coin drops 20% in a day, 30%, 50%. They tell themselves it's just a temporary pullback. They've read about diamond hands and holding through volatility, so they don't sell. The coin drops another 50%. Now they're down 75% from the peak, but they're still up from their original investment, so they convince themselves everything is fine. Then the coin drops below their initial purchase price. Now they're losing real money, money they couldn't afford to lose. But they can't sell because that would mean admitting they made a mistake. So they hold, hoping it will come back. Sometimes it does. More often it doesn't. And even when it does come back, they've learned nothing from the experience. They just start the cycle all over again with a different coin. This is not wealth building, this is wealth destruction. And it's happening to millions of people right now who think they're being smart with their money. The cryptocurrency markets are designed to separate you from your money. They're volatile, manipulated, and completely disconnected from any fundamental value. The price of Bitcoin can swing 10 or 20% in a single day based on a tweet from someone who may or may not understand what they're talking about. That's not a market, that's a casino. And in casinos, the house always wins. Now, before you start yelling at me in the comments about how Bitcoin has gone up thousands of percent over the past decade, let me acknowledge something. Yes, some people have made enormous amounts of money in cryptocurrency, just like some people made enormous amounts of money in the dot-com bubble before it crashed, just like some people made enormous amounts of money flipping houses before the real estate market collapsed. Early adopters and lucky speculators can make fortunes in any bubble. But for every person who got rich buying Bitcoin at $1, there are thousands who bought at $60,000 and watched their investment get cut in half. For every success story you hear about, there are countless failures you don't hear about because people don't like to advertise their losses. The fundamental problem with cryptocurrency as an investment is that there's no way to determine what anything is actually worth. With stocks, you can analyze the business. With bonds, you can assess the creditworthiness of the issuer. With real estate, you can look at comparable sales and rental yields. With commodities, you can understand supply and demand dynamics. But with cryptocurrency, valuation is completely arbitrary. The price is whatever people are willing to pay, based on sentiment, speculation, and manipulation. There's no objective way to determine whether Bitcoin should be worth $1,000 or $100,000. It's all based on emotion and momentum. This creates an environment where professional traders and institutions can manipulate prices at the expense of retail investors. They have better information, better technology, and more capital. They can move markets, create volatility, and profit from the emotional decisions of amateur investors. When you're trading cryptocurrency, you're not competing against other amateur investors. You're competing against algorithms, hedge funds, and professional traders who do this for a living. It's like playing poker against professional gamblers. You might win a hand or two, but over time, you're going to lose. The other major problem with cryptocurrency is that it doesn't generate any cash flow. A dividend-paying stock puts money in your pocket every quarter, regardless of what the stock price is doing. A rental property generates monthly income. Even a bond pays interest. But cryptocurrency just sits there hoping someone will pay more for it in the future. This is called the greater fool theory. You're buying something not because it has intrinsic value, but because you believe a greater fool will come along and pay more for it. That's not investing, that's speculation. And speculation is unsustainable over the long term. Let me tell you about real wealth building. Real wealth is built by owning assets that generate cash flow, businesses that sell products and services that people actually need, real estate that provides shelter and generates rental income, bonds from creditworthy issuers that pay interest. These assets might not be exciting. They might not make you rich overnight, but they provide steady, predictable returns that compound over time. They allow you to sleep at night knowing that your money is working for you, not against you. The key to building wealth is not finding the next hot investment. It's consistently putting money into diversified income-generating assets and letting time do the work. It's boring. It's disciplined. It's the opposite of exciting, but it works. Every wealthy person I know built their fortune this way, not by gambling on speculative assets, but by making smart, conservative investments over long periods of time. Here's what I want you to understand about risk. There's a difference between taking calculated risks and gambling. A calculated risk is buying a quality stock when it's temporarily out of favor. A calculated risk is investing in real estate in a growing market. A calculated risk is starting a business in an industry you understand. These are risks with knowable odds and manageable downside. Gambling is putting money into assets you don't understand, hoping for returns you can't predict, based on information you can't verify. That's what most cryptocurrency investing has become. If you're going to invest in cryptocurrency, and I'm not saying you should, treat it like gambling, not investing. Never put in more money than you can afford to lose completely. Never borrow money to buy crypto. Never use money that you need for emergencies, retirement, or other financial goals. And never ever make cryptocurrency more than a tiny percentage of your overall portfolio. 5% maximum. If you want to gamble with 5% of your money on crypto, fine. But don't confuse that with building wealth. The biggest tragedy I see in the cryptocurrency space is young people who are wasting their most valuable asset, time. They're in their 20s and 30s when they should be building the foundation of their financial future. Instead of putting money into their retirement accounts, instead of buying diversified index funds, instead of taking advantage of compound interest over decades, they're throwing their money at speculative tokens that will probably be worthless in a few years. They're sacrificing guaranteed growth for the chance of hitting the lottery, and most of them are going to look back in 20 years and realize they wasted the most important investing years of their lives. Time is the most powerful force in investing. When you're young, every dollar you invest has decades to compound and grow. $1,000 invested in a diversified portfolio at age 25 could be worth tens of thousands of dollars by retirement. But $1,000 gambled away on cryptocurrency is just gone. Forever. You can't get back the time you lost, and you can't get back the compound growth you missed out on. This is why I'm so passionate about warning people about the cryptocurrency trap. It's not just about the money people are losing today. It's about the opportunities they're missing for the future. Every dollar you waste on speculation is a dollar that's not building real wealth. Every month you spend focused on crypto prices is a month you're not focused on your actual financial plan. So what should you do instead? Start with the basics. Build an emergency fund with 3 to 6 months of expenses in a high-yield savings account. Max out your retirement contributions if you have access to a 401k or IRA. Invest in diversified index funds that give you exposure to the entire stock market. If you want to own real estate, save up for a down payment and buy a property you can afford. If you want to start a business, develop a skill and create something that provides real value to real customers. These strategies are not sexy. They're not going to make you rich overnight. They're not going to impress your friends at parties, but they work. They've worked for generations of successful investors, and they'll work for you too. The key is consistency, patience, and discipline. Put money away regularly, invest in quality assets, and let time do the work. The cryptocurrency craze will eventually end, just like every other speculative bubble in history. The people who build real wealth are the ones who ignore the noise and stick to proven principles. They understand that there are no shortcuts to financial success. They know that wealth is built slowly, steadily, over time, and they have the discipline to keep investing even when it's boring, even when everyone else is chasing the latest fad. Don't let the fear of missing out drive you to make decisions you'll regret. Don't let social media influencers and YouTube personalities convince you that there's an easy path to riches. And don't let the cryptocurrency hype distract you from the real work of building wealth. Focus on what you can control: your savings rate, your investment strategy, and your commitment to long-term thinking. The choice is yours. You can chase the latest crypto trend and hope you get lucky. Or you can build a solid financial foundation that will serve you for the rest of your life. You can speculate or you can invest. You can gamble or you can create real wealth. The principles of successful investing haven't changed, and they won't change because of cryptocurrency. Assets that generate cash flow, diversification, patience, and discipline. These are the tools that build fortunes. Everything else is just distraction. Make the smart choice. Your future self will thank you.